This is the Rodney Bull Show, bringing you truth about money they never taught you. Now, here's your host, the man himself, Rodney Bull.
G'day, legends. And what's cracking, money suckers? Welcome back to the Rodney Bull Show. Today's guest is someone who's taken a different path when it comes to investing. Fadi Habib knows what it feels like to work hard, save money, feel like you're not really getting ahead. Like a lot of people, he found the stock market confusing, risky, and somewhat out of reach. But instead of walking away, he dug in and developed a more structured approach through options investing. Focused on generating income and managing risk, and even better, he didn't need to sit in front of a bloody screen all day to do it. Today, he's the founder of Legacy Wealth Builder Academy, where he helps everyday people simplify the markets, avoid costly mistakes, and build wealth more intentionally through his 6-step growth system. If you've ever felt overwhelmed by investing or thought it was only for experts or gamblers, this one's for you, folks. Fadi Habib, welcome to the show, mate.
Rodney, how are you?
I'm really good, Cobber. Really good. Bloody lovely to have you on today, mate. I've been looking forward to having you on here for a while.
Thank you very much.
Had a bit of a look into your resume and your background, mate, and yeah, it's quite impressive, and you've done well for yourself. Something to be proud of.
Thank you. It was a long road, though. I started a long time ago, like listening to my parents. They told me you have to get good grades, be good at school, which I did. And they told me if you get a good job, 9 to 5, then that's the road to wealth.
Yep.
And so that's what I did. I went to school. I did very well. I was a good student, got good grades. And then when I graduated, I had good jobs. Most of my jobs were high-paying jobs, but again, I wasn't seeing myself getting ahead. So I started like rethinking what they told me. I started to figure out that, whatever they told me, this advice, of course, they're my parents. They told me the best they knew.
Yeah, that's the same for all of us.
Really, yeah, but really 9 to 5 is never a way to get wealthy. And when I graduated, I was searching. I was just like trying to figure out what's the issue. I read this book called Cash Flow Quadrant from somebody called Robert Kiyosaki. Yeah. And it was really an eye-opener. Yeah, a very nice book, very nice read. I recommend it to everybody who's listening. And it taught me that there are 4 ways to make money, and we all get pushed from the educational system to be an employee because the education system wants to produce workers.
Yeah.
The objective is not for you to make money. So I learned that there are 4 other ways. The second way to make money other than being an employee is self-employed, meaning a carpenter in their shop, a doctor in their clinic, a pharmacist in his pharmacy. So this person will also swap time for money, but he or she has a little bit more freedom, and they can write off some stuff to reduce the taxes.
Yeah.
The third one is a business owner, meaning think of somebody who has 20 or 30 Starbucks or Tim Hortons or 40 coffee shops or 20 McDonald's, for example, franchise. So this person does not need to go to work every day because he has employees, he has managers. If he didn't go to work every day, the money will still come in versus the employee and the self-employed. If they don't go to work, they don't get paid. I did not know as an employee, I was swapping my time to make money for somebody else. I didn't know who's that somebody. That somebody is the business owner. The business owner is swapping other people's time, the employees, to make money. And then the investor, which is the best, is swapping other people's time and money to make money. And okay, I said I want to be an investor, but I have no idea what to do. So I started 30 years ago. I had no idea. Because if your parents
been there, done that.
Yeah. If your parents didn't really teach you what to do, you're clueless, really. So anyway, I took a lot of courses. I started in real estate investing. Of course, made a lot of mistakes, and I took a lot of courses, understood a lot of things, and I did well in real estate. And then 15 years ago, I had this view that anybody who puts their money in or invests in the stock market is an irresponsible investor because everybody around me, Rodney, was losing money in stock market. So I thought it must be gambling, right? It must be
Yeah.
gambling. It must be a casino. And I'm a risk averse person. I do not have any interest in losing money. So I said, you know what, better like, it's a casino. I don't want to do it. And anybody who does it is irresponsible. And then one of my real estate investor friends told me, listen, I'm going to this stocks and options course. Why don't you come with me? Um, and I went there to prove to myself that my way is the right way, and this guy doesn't know what he's talking about. Basically, I wanted to confirm what I originally thought.
Yeah.
And then when I went there, I understood that investing in the stock market is like driving. It's what you do with a
Okay.
car. There are people who are driving sedans. There are people who are driving horses. There are people driving a racing car. There are people who are driving a motorcycle. And there's some people who are driving a motorcycle on a rope in the circus. Each one of these, right?
That's a good
Yeah.
analogy.
So each one of these modes of driving, they're all called driving, but each one of these driving methods has its own risk associated with it, right?
Yeah.
Even with the sedan, you can drive it with 50 kilometers per hour and you can drive it with 200 kilometers per hour, right?
Yeah.
So so there's so many and infinite risk levels, and you choose what to do. We are hearing about the people who lose money, who do not have a strategy, who are treating the stock market like a casino. There's so many things that people understand wrongly about the market.
Yeah. It's
And
complex,
they're like,
very complex.
uh, it's not that it's complex, Rodney. It's just that nobody taught them. Like I can share with you like the top 4 or 5 things that people completely understand wrong about the market that cost them money basically. But if they understand that, they can approach them. They can understand what they're doing. So if you're going to a soccer game thinking it's basketball, there's no way you can win. There's no way because like the rules are different, and yeah, so it's different. So would you like me to share some of the things that people understand wrongly about the market?
Oh, for sure, mate. For sure. That was a question we were going to lead into, but yeah, roll with it,
Okay,
mate.
cool. Okay, so the first thing that people understand is that they treat it as a casino. So when you go to a casino, do you have a strategy? No. If you play blackjack, you might think you might be counting and stuff, but most people go into the stock market. Like when you buy a refrigerator or a car, people spend much more time researching about the reviews for the refrigerator and which one is better, which one is it makes sense and good value for money. If you buy a car, you want to test drive it, you do a lot of things, but most people, their level of research in the stock market is that they see a stock going up, so they think it's going to go up forever, and they buy it usually at the top. Or one of their friends told them, go buy this stock, it's really good. That's gambling. That's not really researching at all.
No.
So if you don't have a strategy and if you're treating the market as a casino, you will get the results of a casino, which is the casino will always win.
Yeah, the
The
house
second
always
one
wins.
is that, yeah, the second one is that they think that the stock market goes up all the time. And if it doesn't go up all the time, there's something wrong. It does, it's very volatile. It's not like real estate or anything like that. It goes up and down. It's like breathing.
Yeah.
So I'm inhaling, but it doesn't matter how much oxygen I need. At some point of time, I need to inhale. So think of the stock market as a mechanism that inhales 4 units of time and exhale once,
Yep.
right? So out of every 5 units of time, the stock market, I'm mainly talking about the US stock market, goes up 4 units of time. And the fifth time it goes down. That's on average, meaning most of the time it's bullish, it's going up. But you need to survive and you need to understand that 1 out of 5 units of time is going to go down. And if
Yeah.
you're not prepared mentally, psychologically, and financially to withstand this 1 unit of time going down, you're probably going to lose.
Yeah.
Most
It'll
people
shake you
think,
out.
yeah, most people, what they do is that because they have no idea what they're doing, they buy at the top. And when the market goes down, which it normally goes down, there is nothing wrong with it goes down. It goes down because of COVID or a terrorist act or a war, or like it doesn't matter. Well, just it will find reasons to go down.
Yeah, many
They
reasons.
they panic and they sell at a loss. Okay.
Yep.
So, which is totally wrong. One of the major things as well they misunderstand is how does the price of a stock goes up and down. In the short term, the mechanism of it going up or down is very different than in the long term. So the legendary investor Peter Lynch told us that there's in the short term, which in the short term means anything less than 2 years, Rodney. In the short term, there is absolutely no correlation between the price and the value. What does this mean? So in real estate, for example, real estate investors love to have a building that is worth $300,000, and they like to find a motivated seller that is putting it on the market with $200,000. They see that this is a good value because they take getting it at discounted rate.
Yeah.
So here
the
price is 200, but the value is 300. A lot of the stocks that you see, the price charts that you see, these are price charts. This has nothing to do with value. So in the short term, the market is driven by emotions. It's not rational at all. I tell people that it's like a drunken teenage party in the short term, meaning you can see a really good stock and the price is going down, down, down. You can really see a bad stock and the price is going up. The price and value has nothing to do with each other in the short term, which means that when people are buying because the price is going up, that's really bad way of picking stocks to buy because it has nothing to do with value. It might be really overvalued.
Yeah.
It also Peter Lynch told us that in the long term, the price matches the value. The way
it catches up,
it catches up, exactly. So think of it this way: it's as if we're going to school, third grade, all of us, and there's like 20 kids in the class, and they gave us a poll in the first day saying, "Who's the smartest kid?" I don't know anybody. I don't know Rodney. I don't know John. I don't know Sarah. I don't know anybody. But they forced us to choose or vote on who's the smartest kid. So for now, you know what? I'm gonna choose John. It's a popularity contest. And then after a month, 2 or 3, when the grades start coming in, I know that Rodney is getting the best grades. Okay. So now I know if I vote again in 3 months, now I know that Rodney seems like he's the smartest kid because he's getting the best grades. But the first day, the short term, I know nothing. So I just am gonna vote anybody. So the stock market is like that. It's like a popularity contest in the short term, meaning if people are not rational, they don't look at how much money Meta is doing, right? They don't know. So they just vote. If they like Meta, they will buy it. If they don't like Meta, if there's like a illegal case or something against Meta or monopoly claim or something, they will hate Meta, it will go down. What we're really buying and selling in the stock market are businesses. So when you buy a business, it's very different than if you're buying a car. If you like a car, you can buy it. But a business, you need to be looking at how the business is performing. And any business has only one objective to be evaluated against. It's mainly, are they making money or not? If a business is not making money, it cannot be called a good investment. Cannot be.
No. It needs to be profitable.
It needs to be profitable. If it is not profitable, why would you invest in it, right?
No.
So for me, it's very simple. If you bought any stock without looking at its income statement to know if they are making money or not, or their balance sheet to know if they are financially responsible or not, or their cash flow statement, the statement that tells you if they have cash flow or not, because that's essential for any business, then you're a gambler. If you never really checked if this company is making money or not, and you went to buy like their stock, like, what are you other than being a gambler? So people need to understand that with simple checks, you can really figure out if this is a good stock or not. Another thing as well is that people sometimes think that risk and ROI, that they can separate risk and ROI, or sometimes they're oblivious that there is risk. There is risk in everything. If I'm crossing the street, there's a risk of me being hit.
And so ROI, just for the listeners, is return on investment.
Return on investment. Yeah. So return on investment is the profit you're getting from investing. So basically, if you invested $100 and you're getting $2 at the end, your ROI is 2%. You're getting 2% back. So if you think that the profit is too high, it means that the risk involved is too high as well. You cannot separate the two. And you cannot, like, a lot of people approach the stock market also like a 2-year-old kid crossing the street. The 2-year-old cannot comprehend that there are risks, right?
Yep.
And even if the kid could cross the street once or two times without an accident, it's just an accident waiting to be happen, right?
Yeah.
You need to know what are the risks involved, and um, and basically this is the way to risk mitigate. So with the stock market, you need to understand how other people lost money in the same thing.
Yep.
And people lose money a lot because of their psychology that is not matching.
Yeah, there's a lot to learn, about yourself, I reckon, that I've learned, Fatty, in investing, It teaches you, well, if you start digging into it properly, it teaches you big time about how much your emotions come into play.
Exactly. And um, like I was always wondering, Rodney, why do people buy a stock at 400 and sell it at 200? You know, when the stock starts going down, everybody sells, and that's why it's going down. And what I understood, it's really a psychological thing. We will go to a great length to avoid pain.
Yeah.
Okay, we will do a lot of more work to avoid pain. To avoid 1 unit of pain, we will do much more work compared to the work we're going to do to get 1 unit of pleasure.
Yeah.
Okay, because people, we hate pain. So people sell at a loss because they do not want to feel the pain of selling at a lesser price. So if somebody bought the stock at 400, they will sell at 200 because they will say, you know what, I will take this pain, but I cannot handle the pain if the stock goes down more to 100. You
Yeah.
know what I'm saying?
Yeah, mate, for sure.
And that leads to a lot of losses. What people should do is that they need to understand the value of a stock. And it's hidden. It's not there in the price chart. So if a stock was at, like, if the real value, the intrinsic value of the stock is $300 and the stock right now is at 200 or 100, that's a great buy because it's the same as the condo that is worth $300,000,
Yeah.
but there's a motivated seller that's selling it at 200.
Yeah,
So
definitely.
so yeah, so the people who know the stock market well, they understand that when the prices go down, 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 it gives the opportunity to buy. So
Yeah.
everybody's selling. And that's why Warren Buffett said that I'm not sure if it's Warren Buffett or who said, buy when there is blood in the streets.
Yeah, yeah.
Like
I
when
think pretty sure that was
everybody
a
is
Buffett
bad.
saying.
Yeah.
And it's so
Yeah.
true, But it's a bit easier said than done, Fatty, like,
Yeah, it is very difficult to do because you're going against everybody else.
yeah,
Everybody
yeah,
else is telling you it is Armageddon. The economy is like world is collapsing.
yeah. And
Sell, 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 sell,
we're herd
sell.
animals ultimately, so you like to stick with the herd.
Exactly. You're completely
So
right.
you got
And
to
it's
try and
very difficult. Yeah,
get that
it's very
contrarian
difficult.
mindset.
Yes, contrarian mindset. And it's very difficult to go against the grain. But if you know what you're doing, if you know few of the things that I just shared, that the market goes up and down, but mostly it goes up, 80% of the time it goes up, there has not been a point in time whereby the market goes down and did not come up again to make a higher high. Okay, so all wars finish, all terrorist attacks go away, all financial trouble
Sorts
passes,
itself
and the
out, yeah.
market will recover. Yeah, and the market will recover in the long term. Well, like we have been data for the last 150 years, always goes up at the end of the day. So if you stick to buying really good stocks, and for me, good stocks is very simple. Good stocks are stocks that are making money. By the way, you will be surprised that more than half of the companies in the stock market are not making money.
Yeah,
More than half.
it's
More than
unreal, isn't
half.
it? You think, how the hell are they
Unreal.
even there?
So if you choose a good stock, basically, again, you're not buying lottery tickets, you're buying businesses. And if you choose a good business, meaning a business that is making money, that is solid, that the profits have been increasing, have been happening for the last 5 years, and it is increasing if the return on investment and return on equity is doing well, and it does not have a lot of debt. If you have a good, solid company, it will go up even if it goes down in the short term. And if you don't mind, like if you don't put a lot of weight at the price movement in the short term, it doesn't matter if it goes down. It doesn't matter. If it's a good company, it will go up in the long term, same as what Peter Lynch told us. So, for example, Meta Facebook, in the beginning of 2022 was at $400. And then it went down for a complete year to 80. It lost 80% of its price. But it has been a good company. It is profitable. So if you understand that the market will give you these opportunities in terms of really good stocks, companies are making money, sometimes will be out of favor from people, or people are afraid because of the economy or COVID or whatever, and the price of it will go down. It gives you an opportunity to go and buy at a discount.
Yeah.
A year or two after that.
You need to bounce on that when it presents itself.
Exactly. And you need to understand the opportunity when it comes. And you will not know that except when you know some of these things, that the market goes up and down. So these opportunities come. Number two, the fact that there's something called intrinsic value that tells you the value of the stock. It's not just the price. The price is just the going rate today, but the value is very important. So a lot of people that understand the market, they try to buy as much as possible when it was at 100 or 80. 2 years after that, Meta was at $760, same like 10x. And yeah, so a lot of different opportunities will present itself if you understand. It's really logical. For me, if you cannot sleep at night because of your investments, it just means that you're gambling.
Yeah.
It should be without a lot of stress. It should only take 10 to 15 days. Another thing that one of the big myths, Rodney, is that you can make money quick in the stock market. And
Yeah, no,
everybody,
it's a get rich slow scheme, not a get rich quick scheme.
exactly. Everybody who thinks that they can get rich quick ends up losing money. I hate day trading. I think it's a quick way for a lot of people to lose money very quickly. For me, it's not a really responsible, it's more that it feeds this get rich quick craze that everybody is having.
Yeah.
And then like one of the times they asked Warren Buffett, they told him, why is it that people, like what you're doing is very simple. Why is it that people are not making money like you? He said, people are not interested in making money slow. People are interested in making money rich. And that's why they lose. Because it's kind of a slow process till compounding takes effect. But if like I talk to a lot of people, Rodney, that lose a lot of money because they are just impatient. They cannot have a grip on their greed. And also the people who have a lot of greed,
It's a problem, mate.
Yeah, it's a big problem. And they also become victims to scammers. There's so many scammers out there. The one that like 5 of the people I know went into is something called a pump and dump scheme. Basically, it goes like this. And on my YouTube channel, I have an interview with one of my students who was a victim of this before he came to me. So it goes like this. They tell you, listen, you get a quick invitation on WhatsApp saying, come join our WhatsApp group. We have this guru, blah, 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 who will be telling you what to buy and what to sell, when to sell, and you will make a lot of money. So it's a free WhatsApp group. You go into that WhatsApp group. They tell you we have this analyst, and you go and check on LinkedIn. You will see a page on LinkedIn about this guy. So it seems legitimate. And then this guy at some point gives you a little bit of research and tells you, go buy company XYZ. And if somebody gives a recommendation, the probability of the stock going up or down is 50%. Okay. So like half of the times it's going to work, half the times. So they take the people that made money from whatever he said and they put them in another WhatsApp group. Okay. Now all these people in the new group have already made money from this guy. Okay. And they tell them 2 or 3 more things. And every time, like out of the first 1,000 people, 500 made money. So they put them in another WhatsApp group. And then they tell this 500, go short ABC or go buy ABC. If they made money, they put them another way. So after 4 or 5 times, all the people in this group have made money 4 times from this guy, just by pure luck.
Yeah.
So they trust him. They trust him to the nth degree. Like, whatever he says, they're gonna do. And these people, what usually they have is that they have a really bad stock that they want to dump. They want to sell, but the price of the stock is really bad. So what they do is that they go to these WhatsApp groups and they tell them this stock will go up really high in the next week. Go buy, buy, buy. So they push everybody to buy it. The stock price goes up, they sell it, and they disappear. And
Yep.
everybody loses their money. It's called the pump and dump. And Rodney, these people that were a victim of this ploy are all very smart people. They're not stupid. So don't everybody who's listening who feel that they cannot be a victim, you can, because they told me that one of them told me that the people in the WhatsApp group have been sharing about their kids and stuff. They're real, and he found out later that they were bots.
Yeah. So much of that going on, eh? Unbelievable.
Yeah, and when they tell you go buy that stock, they will give you some research that if you checked, you will see that it's correct. So they tell them about this company that it won a contract from the whatever Australian government, and you go check, you'll see that it's correct. So you think that the research is right, and after the stock price disappears and goes down, and you lose all your money, you only saw them on a WhatsApp group. They're nowhere to be found.
Yeah. Yep. Yeah,
One of my friends, is a university professor. This guy that was my student was a business owner. Another guy was a finance professional. Basically, they are smart people. And again, if there's something seems like too good to be true, it is good to be true. You need to understand what you're doing and protect your money. One of the major myths as well is that your objective in the stock market is to get the highest ROI, highest return, highest profit. No, the first objective should be, if you're a responsible investor, is to protect your capital. Number two, while your capital is protected, then and only then you try to figure out what is the highest ROI. But you never put your capital at risk.
So
for the hopes of high
risk
ROI.
mitigation is key, eh? First and foremost. Work out what your risk to reward ratio is ultimately.
Correct.
Yeah. And I guess, I'm one of them people, I got to honestly admit, I got taken by a scam many years ago myself, mate. And ultimately it comes down to the fact of greed and FOMO, and that's what I believe ultimately that your scammers actually play on. They know so well that them two things are huge players in people's minds and their mindset about things.
Yeah, and it's
missing out.
hard on that video because they rob you from your hard-earned money.
Yeah, they're exceptionally good at what they do, but it's actually quite easy for them, I believe, because it's such a strong trait in humans, that greed factor and that fear of missing out.
Exactly. They prey on the greed. Yeah, and they're very hard to capture because it's all online.
Yep. And
It's all online.
at the time, it hurt. It hurt in my wallet. It hurt in in my pride,
Yes.
my ego.
Yes.
But
Yeah.
ultimately, over time, I've managed to look back at it as being one of the best things that ever happened to me, Fadi, because it really, really made me sit back and take stock of myself and situation of what I was trying to do, and made me realise that you need to pay a lot more attention to these sorts of things, and ultimately comes down to educating yourself, eh? And finding fabulous people like yourself in the world, mate, to be able to gain valuable education and knowledge from, and then put it into practice.
And kudos to you. It takes a lot of courage to admit that this happened to you. But I think also this, for me, is the road to triumph on the past, is to not be ashamed of it. Yes, this happened. I learned from it and I moved on. So I think that's an important part in the healing process. And
For sure, mate.
anyway, thank you for your courage and for like sharing that as well.
Yeah, no, I try and share it with as many people as I can. It took me a while to get to that place, mate. After
Mm.
it first happened, it's something that you wanted to try and keep hidden and hide from yourself. Even trying to hide it from yourself, let alone trying to hide it from everyone else, But
Mm.
that's not the key, eh? That's not the trick. Why you need to take that lesson and the more you share it, ultimately, I think it helps reinforce it for yourself, and then it helps make other people
Other people.
uh, more aware.
Yeah, I had a lot of respect as well for for my student when I told him, listen, this will help a lot of people if we if we do an interview, and he agreed to that. So I had a video interview with him on my YouTube channel. He talks about the different how did it happen in detail. And here's the thing though, like if you don't hear this story, how will you know? It's like for me, it would be very easy for me to get scammed into something like this if I didn't know the story. Um, I gotta tell you, they have a big grip on people. So one of my friends uh, is a finance guy, so he's very smart, and he was part of that. Like he went to them, he made money once or two times, and he was pushing me like hell to go with them.
Yeah.
And he was telling, like, he was conviction, Fadi, I tried them, I made money with them, but I felt there's something fishy about it. I've never heard of this scam before, but it seems like there was something weird about them. The fact, like, so I went in, and every now and then they were trying to change WhatsApp group, and the guy was pushing me to give him screenshots. Did you buy? Did you buy? Did you buy? And because I wasn't really receptive to what he's saying, he kicked me out of the group. But
That's a good
I
sign,
felt,
eh?
yeah, yeah, but it felt there was something not right. Like, why is he pushing so much? Why does he want a screenshot? I guess the way he takes commission from the biggest scammer up there is to prove to him that he like, duped. This is how many people I duped. Like anyway, and this guy lost to 150,000. My friend lost $150,000 in this thing, and he's a finance guy. Like he's not any guy. He's like that's what he studied, economy. Um, so I hate the fact that people lose money like this. It's unfair. No.
Yeah. Anybody can be taken by a scam, eh? Without a doubt.
Yeah, true.
And quite often, like you're saying, that it's awful. A lot of times, it's well-educated, so-called smart
Yes.
people
Yeah.
that are getting
Because it
taken
has
by these
nothing to do
scams.
with it has nothing to do with education or your smartness. It has to do with your greed. It's an
Yeah,
emotion,
yeah,
right? It's an emotion. Um, yeah, it's an emotion. So it's not logical. It's if like I learned from my experience so far is that I do not seek, I get worried if something promises or something gives money too quickly or too easily.
yeah,
Okay. Because it means that I am not aware of the risk. There is a risk. If there is higher ROI, there is higher risk. Like the highest ROI possible is a lottery ticket. You pay $1, you get $1 million. There's no better ROI better than this, but also has the highest risk
yeah,
because
yeah.
like one of my friends told me that your chances of winning a lottery doesn't change if you buy a ticket or not. That's how low it is. It
Pretty
doesn't
much, eh?
change.
I
Pretty much.
tell a lot of people I
So
spent a lot of years trying to win lotto without a ticket.
yeah,
It hasn't worked yet, and I
yeah.
bought a few and it didn't work either. So there's not much difference.
So I don't want something with a huge ROI because I don't want to take the huge risk.
Yeah, yeah, and that's the great thing again, isn't it? Can buy, and that ties in with the wanting to get rich quick scheme.
Exactly. Nobody can be rich from a get rich quick scheme.
No,
And if somebody got a big check because of something stupid, what usually happens is that they can make money in a month, two, three, and fourth month, they give everything back, including their capital. So don't go for high risky stuff. And high ROI stuff is high risky stuff. Don't go for high risky stuff because your biggest asset, your biggest job as an investor is to protect your capital, not to make the highest ROI. So when they ask Warren Buffett, what is the first rule of investing?
don't
We all
lose
know it.
money.
Do not lose money. This guy made 6.5 million% ROI in his 65 years. So he is tremendously successful in making money and in getting high ROI. But when they asked him, what should we do? He did not say, go get the highest ROI. He did not say so. He said, do not lose money, protect your capital. And the second rule is, don't forget rule number one. So he did not, like, I would expect from somebody who's successful like that saying, go get the highest ROI. He didn't. There's a reason of what he did. Do not lose money.
Yeah, and the proof's in the pudding, of what he've achieved over time.
Yes, and he did it
that's
very slowly.
That's where that patience factor comes in, doesn't it? Learning to control that greed within yourself, and that push for fear of missing out, of wanting to be rich super fast rather than be willing to have the patience to wait for it to come to you at a bit slower pace.
Warren Buffett is fascinating for me. The first time, his age when he bought his first stock, it was 11 years old.
I don't know about you, but I didn't even know what stocks were at 11.
I didn't know it. Like, I don't know how did he like the idea of me buying a stock at 11 never occurred. I didn't know even that there was a stock market. And one of his greatest strengths is that he was involved when he was really young in few businesses. So he had a game business, and he was involved as a kid in 2 3 businesses, so he knows how to evaluate businesses. He knows what is free cash flow means. He knows what an income statement means. He knows how to make a company profitable. So understanding what is a business and that it's not a lottery ticket is very important. Most people treat the stock market as a lottery ticket. They treat it as if they're buying a lottery ticket. Buying a share in Meta is, and if your strategy is to buy something hoping that it's going to go up tomorrow, that's not a strategy at all.
No.
Again, you're buying it as a lottery ticket, hoping that it might win. That's not a strategy. You buy productive businesses that are profitable, that will keep on giving profit, and that's why we know that it's going to give value. And for a company that is giving profit day in and day out, it gets priced correctly, and the value goes up, and the price goes up in the long term.
Yeah,
it's never like day trading. Like, have you ever heard of a billionaire who's a day trader?
Not particularly, no.
No. You know what? You know why? Because it's not doable.
No.
Because if it is that easy, you can make so much money.
We'd all be doing it, wouldn't we?
Yeah, we would have seen one or two billionaires by now. Yeah. So you get this Facebook ads.
You could make money day trading. There's no doubt about it. But I think you're more prone to give the bulk of it back over time than you are to keep growing.
I would say no. You will not make money, because for me, making money means consistently making money. It's not that I want to make so much money day 1, 2, and 3 and lose it all on day 4, right? And most of day traders I talk to, Rodney, very, very few are successful. And these successful people, if they're being honest, you can ask them how many accounts they blew up, meaning they zeroed the account. It's not small. And the reason is that they go against the grain of the statistics of the stock market. The stock market says, there's one of these graphs that I can send to you at some point. It gives on the x-axis, the horizontal axis, how many years invested in the stock market, and the y-axis, the vertical one, is the probability of you losing money.
Yep.
So if you put your money in the stock market for 20 years, the probability of losing money is 0, because you put it in the long term.
Yeah.
If you put your money for 10 years, the probability of losing money is about 5%. And the lower the number of years, if you put your money in the stock market for 1 year, the probability of losing money is 25%. Okay? So the lower the number of years, the higher the probability of losing money. Okay? Yep. Think of the day traders. They put their money for 1 day, not 1 year. So if you look at the chart, it goes exponentially up, because it is not like it's like tossing a coin. and they are trying to time the market and make a bet whether it's going to go up or down. And if Warren Buffett
and that's a big
cannot
one,
say,
trying to time
yeah,
the
cannot,
market, Like
yeah,
good luck with
if
that,
Warren, if
Sometimes you
Warren
could
Buffett is
jag it,
telling you
but
you cannot time the market, you cannot do it, then why do you think you'll be smarter than Warren Buffett? It's weird. So being responsible and getting a decent ROI without putting your money at risk, at a lot of risk, because there's always risk, is a key. Is a key.
Well said, mate. Well said. Just trying to have a look at a couple other questions that I've got here, Fadi, you'd like to dig into.
Okay.
So you just probably covered this one here when it comes to options investing. Like this is what you got into over time and
Yes.
developed your system on. Before you got into that, Fatty, what were you doing through your investing time in the market that ultimately led you to obviously some mistakes and some losses, I'm guessing, that took you into discovering options investing and started
So,
going down that road?
so so I started with real estate, and then when I went to this course, I discovered that, there is a responsible way to approach stocks and options. And um, I was very interested in the subject. It's like my eyes opened that it's not all gambling. Yes, a lot of people are gambling, but I don't have to do this way. It's as if I went to a racing track and I saw all the cars driving crazy speeds, and I thought that all driving is crazy, but it's not. So I took a lot of courses, did very well, and I started coaching at that time. And because I took a lot of courses and I was spending a lot of time doing it because I really liked it, and also I saw the mistakes of a lot of people, um, I developed a system to basically make sure that people are successful while doing it. Most people who took a course, who take a course, the statistics say that 3% of those people implement what's there in the course. It's very weird. Like if you pay for a course, the chances of you doing it is like 3%. And I can understand that, because if you took a course about swimming, let's say if you, for 2 days, you're watching videos about how to do butterfly or backstroke, still by the end of the 2 days, you don't have a subscription to a pool. You never been to the water. There's no way you will be able to do the butterfly swim,
No.
even if you see 6 hours of videos of butterfly, right? So what I did here is I developed a mentorship program whereby you get a lot of feedback. And my system basically, it starts with the G, which is the right goal. Meaning, if your goal is to double your money every year, you're nuts. And there's no education that can fix that. Do you know what I'm saying? Like, if even if you know all the strategies and all the different risk mitigation, if you have the wrong goal, you will lose your money. And the story that I say here is that I'm in Toronto. If I need to drive to Florida, it takes 24-hour driving. Okay?
Yep.
It's so far away. If I insist that I want to be there in 3 hours, what will I have to do? Driving. I have to go at insane speeds.
For
Correct?
sure.
So
Yeah, which
I have to
supplies an
go at,
awful lot of risk.
yeah. So if I know how to drive, but because I have the wrong objective, I will drive crazy speeds. I will go at 900 kilometers per hour to reach there in 3 hours. Even if I did not get involved in an accident the first hour, it's just an accident waiting to happen. I know I will not reach Florida safe, right?
No.
It's either I'm going to kill somebody, I'm going to kill myself, or go to jail or injure, because such a risky thing going at that speed. Same thing with the wrong goal. If your goal is crazy, if your goal is to double your money every year or increase it by 50%, you are attracting to you huge amount of risk, which you don't need. So the right goal is important. For me, 24% is the decent return on investment. It's a good balance for me between ROI, good ROI, and also I don't want to put my money at a lot of risk. R is for research stocks. You need to understand what makes a stock good or bad. Not all stocks are the same. There's thousands of stocks. And
Yeah.
it comes out to a very simple thing. You're buying a business, and a business is evaluated on making money. So you need to figure out if this company has a strong product, yes, is have a long reach and selling a lot good, but are they making money or not? So making money, learning how to read the income statement, balance sheet, cash flow statement. So that's R. O is options, understanding options. Options is like Chinese. It's like very foreign to people in the beginning. So you need to spend some time understanding the mechanics of it.
Yeah.
And what, again, in options, there's like 50 different strategies. I only focus on two low risk ones because, again, I don't like the fancy risky ones. And
No need to
you
make
need
it any
also
more complicated than it
yeah,
is.
exactly. And very important also that you implement in a way that is safe. Meaning, if you're driving a car, if you're learning how to drive a car, you cannot take the car and go to the highway and tell me that you're learning how to drive. It's very risky. If you're swimming, never swam before, you want to learn how to swim, you can't just jump into the North Sea. So the way to do it safely in investment is opening something called a paper trading account.
Yeah.
It's an account that is real and they give you, I think, about $1 million. It's monopoly money. It's fake money. But the account is real in every way, shape, or form. And you try the strategy that you're learning. And I tell people you have no business going from paper trading to real life trading if you're losing money in the paper trading account. If you're losing money in the paper trading account, it means that whoever is teaching you doesn't know what they're saying, or you're making mistakes, or you did not understand the strategy, or you did not learn risk mitigation about this strategy. It doesn't matter what's the issue. You have no business funding your account and going because if you're losing money with paper trading, what makes you think you're going to make money with the real thing? You will lose it.
Yeah. Faster than you could possibly realize.
Yeah. So for me, but you can't imagine how hard that for people because they want to make money fast. So when you tell them you have to go in paper trading for a month, 2 or 3, they can't because like they want to make money now. Of course,
Yeah.
if you jump in, if you took the car to the highway, what do you think is going to happen if you don't know how to drive? Like, what do you think? So that's for me is a major element. And another element as well is the feedback, constant learning, and you're getting feedback because there's something that you can't learn from you. Like YouTube can give you something, but when you try to implement it, if you don't have anybody to tell you if you're implementing it correctly or not, or if there is a mistake or not, or it's very hard. It's very hard. So these are the main elements for the program, and they mostly come from all the mistakes that I made, so that other people don't make them. Um,
Yeah. Well,
but
it's one
bottom
thing to
line
learn
is,
from your own mistakes, eh?
yeah,
But it's even quicker to learn from other people's.
exactly. And it's smart to learn from other people's mistakes because chances are you're going to make them. Um, Basically, what I want to tell people is investing is very important. You need to start small. It doesn't matter how much income you have or how much money you have. You need to put aside um, a little bit every month to increase and grow your investment account. And you don't save cash because that's a sure way to lose money very quickly
Yeah,
because of
yeah. I
inflation.
mean, you got to save, eh? You got to save to build up yourself capital to start with, to have some capital to play with. But
Yeah,
cash is a
not
problem
save.
because they
Save,
just
save,
print more of
save
it every
means
day, so it's worth less and less.
yeah. So inflation takes your like in the buying power of a dollar every day goes down because they keep on printing money. So you don't save. You want to put it in assets that grow in value. Okay, whether it's really like for me, if you're serious about making money, you have to be in one of these three or in these three at some point in your time in your life. Stocks, real estate, and owning a business. These are the main three, not being an employee. I'm not saying go resign tomorrow. That's not responsible. What I'm saying is that the first thing you need to do when you're a student, when you're a kid, the first objective is to go get a job. And as soon as you got a job, your objective is to get yourself out of that job by investing and growing your assets so that they can provide you with enough income and enough growth to replace your job. So Very important to start small, put something aside, learn one of these things like stocks. Don't be in the three at the same time. The hardest one and the most riskier one is opening your own business. Much more difficult. So you start with stocks or real estate. Stocks, probably you will need less capital than a real estate because usually down payment is a little bit big.
Yeah.
So you start with stocks, and every month, like the simplest thing is just go buy the SPY, the index fund. It goes like the history says in the last 100 years, it goes up about 10 to 11% per year average.
Yeah.
So with that rate, you double your money every 7 years. So every now and then, every month, you go and buy a little bit. You buy when it's low, you buy when it's high. It doesn't matter, just every month you buy a little bit. And
So like dollar
overall,
cost averaging as such.
yes, exactly. DCA, dollar cost averaging, it will. So that's if you don't want to manage anything. Of course, if you learn a little bit better how to pick good stocks, um, that will boost your ROI a little bit. And if you learn something like options, it will boost your ROI more. But regardless, the simplest thing is just if you buy the ETF, the SPY, and just do nothing. Just like that's it, low cost ETF, and you buy every month, and you don't need to think about it. It's going to go up for 10, 11% per month, per year,
Yeah.
on average.
Yeah. That's a good starting point.
Yeah. And investing is the way to go. So never be content with your 9 to 5. You need to invest and buy assets that grow. And the more you do that, at some point of time, these assets will take care of you.
Yeah,
Okay.
for sure, Fadi. Yeah, like I've been listening to and learning from some wonderful people like Robert Kiyosaki and many other people
Yes.
in the same sort of game as him, and different aspects, mining stocks, people like Rick Rule and different people like that, mate. There's so much to learn from them people, and the proof is in the pudding of how successful they have been, and they're so willing to share their knowledge. Hey, so why not
Yes.
take all that you can possibly gain from what they're willing
Yeah.
to share? And people
Yeah.
like yourself, mate, are doing the exact same thing. It's through trial and error and experience, but
Yeah.
and I agree
And the
wholeheartedly.
system,
The real estate
yeah,
is a
and the
big one to
system
start
is
with.
designed, the system is designed that if you're swapping time with money or your savings, you will never make it.
No, no,
The game
definitely
is
not.
about the game is about being an owner, not a worker. You
Yeah,
need to own assets. You need to use leverage sometimes to buy real estate and stuff. This is the rules of the game,
yeah.
right? Um, so anyway, choosing what game you play will dictate what results you get as well.
Yeah, and for me, through my own life of discovering, I didn't do well at school. School wasn't a great place for me, and grew up in the bush and worked and lived in the bush for a long time, and been in the mining game for a lot of years now, and making good money, but not having the financial education that one needs to be able to do really good things with the money that you're making, and ultimately you want
Mm,
your money to be working harder for you than you are working for it. And,
exactly.
and you can certainly get it to do that. You've just got to learn how, and it just comes down to education. Education is the key. Full stop.
Exactly. And if you really want to, people find a way. So because YouTube has so many education right now.
Yeah,
So the first level, if somebody doesn't know anything about the subject, is to go and learn what's there on YouTube. That's the free stuff. And then the second level is to go buy a course, a video course. Usually people um, remove the noise because there's so many things on YouTube. So remove the noise and they just focus on one or more strategies. That's another one. The third level is mentorship. When you go and get somebody to actually be a one-on-one with you or in small groups or something like that, so that they can give you feedback. And this is really valuable because it compounds the learning,
yep.
compounds the learning. But you start with a free, and then you make your way up.
Yeah, no, good advice, mate. Really good advice. Well said. You talk about a structured system with your growth framework. But how does it having a system actually protect someone from making bad decisions, mate, and So you say this can be done in around 2 minutes a day.
So having system protects you because part of the system is, if it's a good system, part of the system is the routine every day, what you should do.
Yeah.
So how do you maintain your positions? If you want to go into new positions, what are the different things you'll be looking at? So the fact that there are rules that you're learning to protect you from making mistakes, as well as the routine that you do every day to help you have the right habits.
Yep. So you'd say that it'd help create the discipline that you need to follow.
Correct. Yeah. Also, part of the rules is the risk mitigation rules, which are very important. For example, one of the rules we have is that you never use margin. So let me just explain the concept of margin very quickly. When you go and buy a property, in Canada, I'm not sure about Australia, but in Canada, you can just pay 20% of it. So if it's $100,000, you can pay down payment of 20,000 and get a mortgage or a loan from the bank with 80K. Okay. I'm sure probably
Yeah,
the
it's
same
pretty
thing.
similar, mate. It's pretty similar.
Yeah.
It changes a little bit depending on whether you're buying in the city or you're buying in rural areas as there's a percentage of a deposit that you need. But yeah, same thing.
Yeah, the loan to value. Okay, got it. And in the stock market, it's the same. When you open something called a margin account, for every dollar you put, they usually give you about four.
Yep.
Okay.
Okay.
However, I will never buy real estate without taking a loan from the bank because it makes sense. In the stock market, because it's very volatile, it is catastrophic if you use margin, which means they will tell you, Fadi, you know what? You will see in the buying power, you have $4 to play with, but I will never buy stocks or sell whatever sell options more than the $1 I've put. And the reason is this. The brokerage that gives you the money, they're not your friend. And because the stock market is very volatile, goes up and down, when they see that the stock market is going down, they will not put their money at risk. Remember, it's mostly their money if you're using margin. So when the market goes down to a certain point, they will issue something called a margin call, meaning they will decide to sell your stock, your stuff at the worst possible time.
So you become a forced seller.
Yeah, and this will protect their money, but they will lose your money in a heartbeat.
They don't care about your money, not the way that you care about
they
your
don't
money.
care. They don't care. They're not your friend.
No.
So margin for me is one of the biggest rules in what we do here, and it's hard because if you use margin, you can 4x your profit, right? If you can make $5, if you use margin, you will be able to do 20. And when I tell people don't use margin, they're really upset because like it's as if I'm cutting from their profit. And I'm not really doing that. There is absolutely no advantage or smartness in making $20 one month, $20 second month, $20 third month, and then fourth month comes, they take all of your money. And risk is very jealous of that. Like it's not coming for the profit, it's coming for your capital. It wants to kill you. Like it's not wants to take some of your money, no, it wants to completely obliterate you. So
wipe you out.
Yeah, so no risk is very important. Also balancing ROI and risk. Understand every time before we take a trade, am I okay with the risk involved? And adopting long-term view versus short-term is very key. And it's also very nice because you're not really stressed. If you understand that you picked good stocks and you're holding them for a little bit of a long term, you don't care what happens in the short term. Like, when the market goes down, like because of this war, the people who know what they're doing, they're actually happy because it gives them an opportunity to buy.
Or even more.
When you go to a store, when you go to the grocery store and you see things on discount, do you panic? No, you're happy.
Yeah.
Right? You're happy. I don't know why in the stock market people like panic when the prices go down.
Probably
but
because
it's
they bought at a much higher price, and they
I know
think that
but
it's going the wrong way. So I need to get out now before I lose any
but it's
more.
but that's not the right way of doing things.
No,
Like if you're
but
buying
that's the way that the bulk
if
of
you go
people seem to do it.
listen, if you go every day to the grocery store to buy tomatoes, and it's $5 per kilo. Okay. In Australia, is it per kilo or per pound?
Kilo
Okay,
per
good.
kilo.
I like kilo. Yeah. So if you go to the grocery store and you find the tomatoes, good tomatoes, $5 per kilo. Next day, you bought them at $5 per kilo. And then one day you went there and they're at $2 per kilo. What do? You're gonna buy more because it's $2 per kilo. What people do, which is very weird when I tell you what they do. What they do is that they see that it's $2 per kilo, they panic, they go home, they get the tomatoes that they bought with $5 yesterday, they go to the market and sell it at two. That's what they do. Okay? When you see something at $2 and it's still good tomato, it's time to buy. It is very weird and stupid to go to your home, get the tomatoes you bought yesterday at five to sell it at two. Why are you doing that?
It doesn't make any sense, does it?
Doesn't make any sense, but that's what they do every day. So
Yeah, yeah, it can be
it's
hard to
very
try and make
weird.
sense of the way that
Yeah,
humans think a lot of the time, eh?
yeah. So and the people who understand that the market will give them opportunities every now and then, like Warren Buffett, always have cash on the side because he knows that when it goes down, now is the time to go and buy.
For sure, for sure. So, um, who would you say, Fatty, that options investing is actually suitable for, mate, and who should probably stay away from it? What personality types do you reckon would struggle with this, and what mindset is required to succeed in it?
So stocks and options for me are the same. The people who should like not be involved are the get rich quick people, the people who love to put their money or capital at risk. It's not so it's not that options is definitely if you don't know what you're doing, it's much more risky. But if you know what you're doing, if you're disciplined, if you are not a get rich quick person, if you understand, like if you're a rational person, if you're willing to learn and not put your money at risk, it's suitable for everybody. I have students who are 24 year, I have a 24-year-old quadriplegic student,
Sorry, can you say that
and
again, Fatty? They're what?
I have a I have a 24-year-old quadriplegic student, like
Yep.
somebody who's been in an accident. And I have a 70-year-old student as well. So age, women, men, anything, like, so there's nothing that is suitable or not. The people who are, it's not suitable for people who cannot follow a process, or it's not suitable for people who like to put their money at risk. Some people actually love to put their money at risk. It makes them feel alive. It's weird for me, but they can't stand still. They always want to do something different that pushes the boundary a little bit more. So I would say it's for anybody who wants to learn and wants to be responsible about it. So somebody who does not want to lose their money, somebody who's risk averse, that's what it's suitable for. I don't see a type of personality that it's not suitable for, as long as you're responsible. Like, right?
Yeah.
Like for
Yeah, it's
me,
something that I've
driving
been
is
learning about myself for a little while,
yeah,
the options trading
yeah,
and, puts and calls and things like that.
yeah,
It's tweaked my interest, mate. So I'm definitely trying to dig into it more and more myself, so I can actually get to the point where I can actually start having a crack at it, and putting it into practice.
yeah.
So
And if
yeah,
you
I'll be
do,
very interested to dig into your
yeah,
program.
and thank you, and it'll be a pleasure. And if you start, you always have to start in a paper trading so that you can like don't don't start with your own money, whether it's options or something else. You always start with paper trading to just test, right? Like, let's say I'm telling you there's a lot of money in options. How would you know? You gotta test it, right? Maybe I'm maybe I'm maybe I'm fooling you, right? Anybody speaks about money, you should not be trusting them. Like I start my master classes with, please don't trust anything I say because there's a lot of scammers. How will you know? It's the first time you're seeing me. So anything I
Won't know
say,
until you get taken.
yeah, I tell them anything I say is wrong till proven true, right? You got to put into the critique of your mind, go ask your friends, see if it makes sense or not. Um, Yeah, don't trust anybody who's talking about money. You gotta be careful.
All right, Fadi, we were starting to push up on time here, mate. So I'll just one more question, if you don't mind, mate.
Okay. Yeah.
And we can probably wrap it up then and let you get back to your day. What's one hard truth about the stock market that most everyday investors don't understand, and why it ends up costing them money, mate?
So I shared 4 or 5 in the beginning. You want the most important one? I shared 4 or 5 things that people do not understand that cost them money, like the going to the straight line, it goes up and down. The fact that they think they can get rich quick. The fact that day trading is something, a good way to make money. That's a myth. Another one is that there's no risk, or they are oblivious about the risk. Another one as well is that if they put their money with a money managers or fund manager, that would be good. 94% of fund managers do not make the market, do not beat the market, meaning they're managing the money all the time. Like, remember when I told you, if you put in the SPY or the ETF, you'll make 10 to 11% without any management. Most of the fund managers don't even beat the 10 to 11%. So they're taking fees from you, and they're not even performing well. All of these are things that prevent the people from making money. If you're going into the market and you fail to understand that you're buying a business, if you're buying a Meta share, you're actually a shareholder, you're a partner in Meta. You would not be buying anything before you know that it's making money. Why would you invest? If you have 2 coffee shops in your street, one is making money, one is losing money, and which one are you going to invest in? If you want to see your money back, you got to invest in the company that are making money, right? Like it makes sense. Right? Very simple. It's very simple, very logical. So all of these stuff, like I'll tell you, you'll be, if you pick good businesses, with that is, hopefully it's undervalued, you will be better than 90% of people who go and just wing it in the stock market.
Yeah. No. Well said, mate. Well said. Understand that. And hopefully the listeners are taking all this on board, because this is some really, really valuable information that Fadi's sharing with us here today, mate. Really is, people. Really is. Well, Fadi, thank you for your time today, mate. It's been an absolute pleasure. I certainly hope that I could get you back on again at some stage, mate, and share some more of your valuable time and trying to dig a little deeper into this with people. Where can you share with my listeners, mate, where you'd like to direct them, mate, so people can find your information and get in touch with you and try out your system?
Okay, so I think YouTube is the best way. I have a lot of content there. My company is called Legacy Wealth Builder Academy. So on YouTube, you can find Legacy Wealth Builder Academy. I'm also on LinkedIn. My name is Fadi Habib. Also Facebook. I have a group there, and my page Fadi Habib. But if you search Legacy Wealth Builder Academy on YouTube, or my website, legacywealthbuilderacademy.com, it will tell you all the master classes I have, and you can follow me on a lot of the free content that I share.
Awesome. That's fabulous, mate. That's really good. I'll be certainly looking into it myself. I can guarantee you that.
Rodney, thank you, and would love to talk to you again at some point.
Yep, definitely. Awesome, Fadi. Thank you so much for your time today, mate. Really appreciate it, and there's some valuable information that you've shared with us today.
Thank you very much, Rodney. Thank you.
Cheers, mate. Enjoy the rest of your day, eh?
Thank you very much.
This has been another episode of the Rodney Bull Show, a Rebel Edge production. Please share with your family and friends, and don't forget to like, subscribe, and leave a review.